Barbara, I know you were watching DoorDash and Qualcomm, among others. Qualcomm did better than the flat numbers that many expected, and DoorDash also outperformed. What does it mean to you?
Yeah, no, I'm actually surprised on Qualcomm because that's really their main business is smartphones. And so it'll be interesting when they get on the call to see what they're seeing. The inventory must be down a lot. We're waiting for replacement cycles to kick in. A lot of purchases were made during COVID. So, I think that's sort of stock specific, not so much tied into a broader demand story. DoorDash as well, it's both a macro story and a stock specific story in that it's consumer discretionary spending. People have been for some years ordering more at home, having things delivered. And of course, during the pandemic, that really stepped up. But since the economy's been open for a while now, they continue to do well. They're gaining share against Uber Eats and Grubhub. So I think you're seeing a lot of good things there, and they're reaching scale, and that can help costs. But it looks like the consumer is still spending, still ordering out. You're not seeing the pinch. So I think, people are trying to guess when the consumer runs out of money. And some people are saying by end of this year, which is just a couple months away. But it still looks like with jobs, wages, we still have excess savings, not so much in the lower income, but we still have excess savings, that are higher than the pandemic. And so there's still money to be spent, and people still have income. And there's still a lot of people with low debt. They really took advantage of the low interest rates, particularly with mortgages several years ago. So I don't see the consumer spending falling off a cliff. Clearly is slowing. You've seen that with credit card delinquencies, as mentioned earlier, but that still is just in line with where it was in 2019 and not remotely near where it was in the 2008 crisis.